Good evening, everyone. Welcome back to the channel. So in this video, I'm just going to be real with you all and completely unscripted. So for everybody that loves dividend income and loves investing in companies like WPay, say you put 60,000 in and then it's dropped to 45,000 and you collected like 5 or 600 in weekly dividends and you essentially barely squeak out a break even, there is a better way to invest. You can essentially wheel ETFs and play earnings, and it can work out perfectly for you if you know what you're doing and you have a good strategy. So I will put it this way. I've learned my lesson from the past. I used to like to buy calls on companies like Nvidia, expecting like a big earnings beat. And if you look at it, Nvidia actually had a great earnings report, but what happened to the stock? It tanked. So how is a great way to play earnings when the stock tanks after earnings beat? Obviously, if you bought calls, you lost all your money like that. So that's not something you want to do. But selling covered calls when you already own ETFs like NVDL is the perfect play. And I'll show you all exactly why. So the way I played this quarter earnings season, if you will, when it comes to Nvidia, is because I know how this works. I've studied this, in the past few quarters, and I figured something similar to like November was going to happen, where we had a decent earnings, but the stock didn't really rally. Because if you look at it, Nvidia has essentially been trading flat since like October or so, which anytime a stock trades flat or sideways, it's a perfect environment for covered calls. So, and I know I'm boring you all with that because this isn't dividends, but it's not the 5 or 10 cent multi dividend. But you all got to realize there's better ways to make money other than dividends. And I can't emphasize that enough. You all love dividends, and I can sit here and talk about real ways to make money and lose 3/4 of my audience. But I've just got to be real with you all. That's what I've always been. That's what I always will be. So let me show you all some shots to back up what I'm saying here. And I would appreciate it if you all could smash that like button. And just because of that, I am going to show you all again more content that I should make members only, but I'm a nice guy, so I'll still show the general public without charging anybody anything because that's how I am. So let's go look at it. And this is exclusive stuff. Again, this is content that should be members only. Like, my daily trades and stuff like that should be members only content. But you all are lucky because I still haven't done that yet. So, what I want to bring you all's attention to is you will see today's trade report essentially, and you'll see a lot of green, which is nice. We love green, right? So, you will see over here in my brokerage account, you will see an NVDL call option 2026 expiring February 27th at $90. Now, what I've been doing because I'm recently newly out of the workforce, I'm able to trade a little bit more now. So I'm doing these Friday instead of Monday because the market tends to fluctuate a lot on Mondays. So I sold for a really, really high premium. In fact, you can see the proceeds here, what I sold for this number. And then I was able to buy back. Now, here's what I did. I'm not telling you all the full story here because I have 1,500 shares of NVDL in this account. And so what I was able to do with these is, and for those of you watching, if you could please smash that like button, it would greatly help me out. We need all the likes we can get here. Um, and comment away. Let me know if you all have any questions on this, of course, because I'm showing you all how to actually make money. Unfortunately, what we're learning, the dirty secret with a lot of dividend funds don't actually make money, but I'll just keep that between us watching this video. Don't let that get out, obviously, even though it's a public video. So, okay, so I bought this back here's what happened. So I figured there was numerous ways this could have gone. So after the earnings report we saw, Nvidia could have rallied and shot through the roof. After all, the day after the State of the Union address, the entire market rallied, right? So, and then Nvidia during the day rallied. It was up to it was up at one point to like I want to say 197, but you saw today it tanked down to 184. So after the earnings, I guess there was some long term. There's always some bullshit that the pundits say. When you see a stock behave a certain way, the pundits come out the next day and they're like, "Oh, that's because there's investor concern over whether or not their future revenue is sustainable." And to me, I think a lot of that is bullshit. I think that look, they had a great earnings report today. Why can't we just live in the present? and be happy with a solid like 72% revenue growth. I mean, how can you do better than that? 72% revenue growth. So anyway, so if the stock had shot up, I would have actually been called out of these shares. But what I did on February 24th here, I actually bought 300 more shares, or excuse me, the week before, I sold puts to get assigned into 300 more shares of NVDL so that I could then pair my shares up to 1500 from 1200. So then essentially, you'll notice Friday the 20th, I did the 12 contracts here and I took this in, and then I was able to do on the 24th, I was able to do three more. So essentially, this was my total. This is what I bought back for. And essentially, it was a great gain. So at this point, being out of the workforce doesn't have me too down because I mean, I can tell you I wasn't doing this in a week working. And that's for sure. Now, you all will notice in my second account here. So what you'll notice, first of all, is that I essentially am doing the same thing in, let's see, I think I have this in four accounts. So I did the same thing here in the home equity account. I originally took in this much in premium here and then bought back for this much. So I netted this today. So that was icing on the cake, so to speak. People ask me, they're like, oh, why would you, in this environment, why would you take a home equity loan? Well, it juices my returns, right? Because now I can use money that was otherwise just sitting in the house and I can make another $1,400 essentially. So that's how that works. And then here in my former 401k, which I will be rolling over a second one very soon, um, I did the same thing. This is what's great about it. So now you'll notice another one here. Look at that SMCX, 2 grand on SMCX, a stock that I thought was garbage, making money on that too. That's amazing. But anyway, the same similar setup happened here. What's happening with a lot of these AI plays? A lot of these companies are reporting great earnings, but the market is not reacting to it. They're more, and I don't really get it. They're more concerned about future sustainability than the fact that these companies are hitting it out of the park as far as revenue. When revenue grows, earnings has to follow behind. It's sometimes a lagging indicator, as they say, as economists like to say about unemployment and things like that. Sometimes it's a lagging indicator, but it has to follow behind at some point. So when you have a good solid earnings report for Nvidia or for SMCI or companies like that, the revenue is there, which leads to great earnings report, and then the earnings and the stock have to follow behind at some point after. It's just physics. It's kind of like the law of financial physics, if you will. So anyway, so there's other ones, ignore those because this is focused on NVDL, which is by far my favorite. So I did the same thing here and I bought it back. Now I probably, since it's under 90, here's another thing I do too. You might say, well, coach, why didn't you just let this ride out? You could have made the rest of the meat off the bone, so to speak. Well, the reason I didn't do that is because just in case it rallies tomorrow, I can then do the same trade next week. Because what I've been talking about, it's a little bit out of the scope of this video, but I've essentially been doing the trades. I've been wheeling NVDL every week this year. And because of that, it's been very well. This is my number one fund by far. I think I'm already, I've hit probably 50,000 or so just in NVDL this year, which is pretty amazing. So, and then you can see SMCX and TQQQ. This one, so I don't own it here, but in 3 accounts, essentially, I did the same thing. So, and it's pretty easy to do actually, if you're wanting to do something like this. First of all, you've got to have blocks of 100 shares. And then you have to, so you can sell puts to get assigned, or say it expires out of the money, you just keep the premium and never get assigned. But if you do, then you own 100 shares, then you can sell covered calls on it. Oh, one of my favorite people is on Pay the Piper. How about this? This is, I know we both like to trade the same things. He's actually one of my mentors, believe it or not. I know coach has a mentor, right? Hard to believe, but um, yeah, it's NVDL is like one of my favorites this year by far. In fact, I have another tab that I'll share with you all just real quick as bonus content. I wasn't going to do this, but since you all have been very well behaved throughout today's coaching session, I just might do it. So let's see. Let me see if I can share this. All I did was a simple export, and this is on Apple. So Let me see. I might try to just do this, or I might do the window. Okay, real quick. So we're over 10 minutes. So please, folks, smash that like button. 2 thumbs way, way up. Okay, so, oh, look at that. I've got the tunnel. Maybe this won't work unless I can do, let's see here. Hmm. Nah, I don't think it's gonna work. Oh well. I'll give you all the number though, just for the heck of it. Why not? So oddly enough, so SMCX, which is one that everybody thinks is just horrible, but I'm up to I think 9,000 for the year in that one. NVDL is 40. Okay, so that's pretty good, but I couldn't pull it up here. Okay, so folks, that's gonna do it. I need to get like at least one more like before I end the video. Otherwise, I'll have to do like a rain dance or something here to get that. Come on, we have 9 of you on. We got to get one more like. I'm showing you all how to make money. So, and then I'm calling this to get you all's attention, the thumbnail, better than dividends. This really is better than dividends. You earn up to 6-figure income doing this. If you play your cards right, you can earn a 6-figure income on this. So folks, really pay attention to this, really hone into what I'm saying here and the strategy and all that. There's a strategy behind this, not buying calls, but selling covered calls on shares you already own. You really can't go wrong. Worst case scenario, you get called away and you keep all of that premium that I showed you all. In fact, if I had gotten called away, it probably would have worked out better because I would have kept the other premium that I used to buy back. So anyway, thank you all so much for tuning in. Please remember to like, comment, and subscribe and join the Discord. And we'll see you all in the very next one. Happy investing. Take care. Bye.